Welcome back to my channel. As you know that in our previous class, we have discussed about the meaning, tools, techniques of financial statement analysis. Now continuing this chapter, in today's class, we will discuss about purpose, objective, significance of financial statement analysis and parties who are interested in financial statement analysis and also the limitations of financial statement analysis. So starting the class, first point is purpose, objective and significance of financial statement analysis. What is the purpose or what is the role? Why we need to prepare financial statement analysis? We have to discuss all those points in this heading. First is assessing the earning capacity or profitability. For assessing the earning capacity or profitability of the company, we have to analyze the transactions. Transactions like statement of profit and loss. With the help of profit and loss, we can calculate profitability of the company and earning capacity of the company, that is net profit after tax. Clear. Next is assessing the managerial efficiency, whether the management is efficient or not, whether they want to need, there is a need of improvement in efficiency of management. It can be determined with the help of analysis only. Next is assessing the short term and long term solvency of the enterprise. How can we calculate short term solvency? Short term solvency means current ratio, which we have discussed in previous class, that is also known as liquidity ratios. And in case of long term solvency, they have to be discussed in activity ratios, which I have explained in previous class. And the numerical portion of practical problems we will do in chapter 4, that is ratio analysis. So with the help of the analysis of short term solvency or long term solvency, we have to prepare analysis table. Next is inter-firm comparison. I think you are very much aware about the inter-firm comparison. When the firm's transactions are compared with any other firm's transaction of the same year, they are called inter-firm comparison. They are also in the form of horizontal analysis. सामने सामने हम करेंगे उसको. ठीक. Next is forecasting and preparing budget. The main purpose of preparing statement analysis is so that the company or CEO or board of the directors can forecast their further planning and they can prepare budget for the next year, because the budget and planning depends upon earning capacity of the business. If the profit is earning higher profit, then they can grow their business, growth will be possible, survival will be possible. And if there is not as much profit, then they have to improve the efficiency of employees as well as managers. Clear. Next is parties interested in financial statement analysis. Parties are the same as we have learned in 11th standard and in the same year in the 12th class in first chapter. Parties who are interested in financial statement, they are also interested in financial statement analysis. Who are they? First is management. Management is interested to know the financial statement analysis because they have to make policies, rules, regulations, etc. Employees are interested to know the financial statement analysis because their increment, their bonus depends upon the analysis. If the firm is earning profit, then only they can get bonus or increment in their salaries. Shareholders are the person who have invested money in the business. They are the real owner of the business. But when they invested the money in the business, they want some refund in the form of earning, that is known as dividend. Dividend to shareholders is paid only if there is profit in the company. So they also want to know financial statement analysis. Next is suppliers. Suppliers, we can also say creditors. Suppliers or creditors are the person who provide goods on credit to the company. So they want to know this analysis to verify that whether they will get their money back, principal amount back with interest or not in future. In bank are the person who provide loan to the companies. They are artificial person. They provide loans. So they are also interested to know about their refunding money of principal amount or interest. Researcher are the person who make research for the company. For example, if the company want to diverse their production, change their production, then the researcher are mainly responsible for telling the new product. Or if they want to modify their existing product, then it is the responsibility of researcher only. So they also want to know the analysis. If the profit earning is more, then they can take risk. Otherwise, they are not allowed to take risk. Tax authorities, they charge tax. Tax authorities means government. They lay tax on the earning capacity of the business. They want to know actual analysis of statement of P&L. If there is more profit, then more tax is to be charged. Less profit, less interest, tax will be charged. Customers are the person who are the real king of the company. Customer are the person who purchase goods. If the profitability of the company is good, then it is automatically comes in the mind of the customers that they are producing good things. And if there is loss, the faith of customer will automatically decline. So they want to know statement analysis of the company. While we have discussed the need of the financial statement, parties of the financial statement, there may be some limitations because each coin has two faces. In the same way, when we have some benefits of the financial statement analysis, we must have some limitations. So limitations are, first is historical analysis. All the analysis or all the data which is filled in the statement of analysis depends upon the historical cost. They are not related with market value of the transaction. Next is ignore price level change. Price level change is totally ignored while preparing the analysis. Clear? Next is qualitative aspects are included. Only quantitative aspects are included. Qualitative are ignored. Totally ignored. Not free from bias. When one person make analysis, there may be some bias. Depends upon the will of the accountant. So it is not free from bias. Next is window dressing. In case of window dressing, we can also say manipulation of accounts. In analysis, accounts can be manipulated to avoid or reduce the taxability. Clear? So these are the limitations. From this chapter, these will not be asked in so many details, so we can write the theoretical or the detail of these points on the basis of which we have read in class 11th. So this chapter is completed. Have a nice day.